So anyway, the general consensus is that because of the slowing economy, we're going to see lower interest rates on the front end. Now, this is really important. I think the reason why we haven't seen tariffs really hit is because what happened was back in the spring, you had a lot of companies front load their inventories. Okay, a lot of that stock now is gone. Those inventories are gone. They got to go back into the marketplace and they've got to rebuy. And are they going to rebuy at higher rates? And that is scary. That is very scary. And I think we can see that happening. So here's what the problem is. Jay Powell, now this is a guy that's the head of the Fed. He's been in the news because Trump wants to get rid of him. And I don't know if you saw the clip where they were sitting, Trump with the hard hat and him, and Trump was beating him up. Did you see that, Dick? It was kind of funny. He goes, well, there's $4 billion or whatever. And Powell's sitting there going, no, Mr. President, you got those numbers wrong. But he has said that if we didn't have this tariff thing, he would have had lower rates. I'll just give you another point, is he's basically saying it's unfair trade. And I think we can all agree on that. But look at Japan. Japan buys a lot of our treasuries. 13% of Japan, 13% of our treasuries are bought by Japan. So Japan, when they sell a Toyota, they receive dollars. What do they do with those dollars? They buy treasuries. Now, if you're going to put a tariff on Japanese cars, they're going to get less dollars buying less of our treasuries. And is that good in the long run? Because if they're not supporting our debt, because we are the best looking horse in the glue factory, we're not going to be able to finance these massive deficits. So that's an interesting thought. So anyway, about 2 weeks ago, and this is, I don't know if everybody remembers, I was sitting in my office, and I remember Vinny comes running in my office and says, Dom, did you hear that the news leaked out from Scott Bessemer that they're going to fire Powell? The futures markets collapsed. The markets were open. The dollar collapsed. And then Trump came out and said, no, I'm not going to fire him. And the markets rebounded. Now, it's interesting because I like the parable with Erdogan of Turkey. When he became president in 2021, he crushed interest rates in a hot inflationary environment, collapsed the currency, inflation went to 85%, and the stock market just got tumbled. So the bottom line is that watch out what you wish for, Mr. President, because the markets do not want Powell to be gone. That's obvious. The global markets do not want the instability of that. And I thought that's what you saw 2 weeks ago. Okay. Now, of course, we all know this August 1st. That's why I had this workshop today, because I remember when he announced the 90-day moratorium, I told Mallory, I said, Mallory, set up a client workshop because there's going to be a lot of volatility in early August. We haven't seen too much. We saw the market take a big hit. On Friday, the market was up yesterday. It was down. Up on Monday. It was down yesterday. It's up pretty good now. I haven't looked at what the market's. It's up about 66 beeps. So, to get into why I think the market's kind of been holding up. Inflation is going up. We all know that. We shop. Lori, we shop. Do you shop, Lori? Oh, yeah, we all do. Oh, wow. And here's what's an interesting point. Rick, you'll appreciate this. The market is trading at 22 times. Okay. Now, what that means for people that don't follow the markets, price to earnings. A stock is based on how many times it trades over its earnings. That's called price over how many times. So if IBM earns $10 and they trade at 10 times what their earnings are, they're trading at $100. That's all that means. Right now, the market is at 22 times. So you could argue the market's in bubble territory. Let me go back there. You could argue that the market is in bubble territory, and this high-tech thing the team got me, but we're right there. So you can see that 2000, the dot-com bubble, 22, we knew what happened in 22. So, from a valuation point of view, if the earnings don't keep driving this market's going lower. That's what that tells us. And what's interesting is we're starting to see consumer-facing companies report this quarter, like PepsiCo and Procter & Gamble, and they're saying, hey, tariffs are killing us. Our guidance going forward is not going to be great. So that's scary. That's going to seep in. And yes, prices are going up, ladies and gentlemen. That's a foregone conclusion. Look at Caterpillar. Warns 1.5 billion in tariffs hit as trade tensions dent earnings. They talk about Molson Coors. They talk about the 50% tariff on, how do the English say it? Aluminum, right? They say aluminum. What's up with that? I call it aluminum. But there's a 50% tariff on aluminum and steel. So, Mark, the bottom line is, Diageo, Mark, you were in the beverage business. They're warning that their profits are going to get hard because of that aluminum, because of that, you whiskey drinkers, Johnny Walker, forget about it. So the bottom line is not good for forward-facing companies. So the Fed, and Rick, you know this, the Fed has a dual mandate. Their mandate is this. They have to look at unemployment and they have to look at inflation. Okay, so Jay Powell is in this dilemma because the job numbers are saying we're flat, recession, people are talking the R word, but if tariffs start seeping in higher prices, is he going to be more concerned about inflation, which means you raise rates? We saw in the 70s and 80s, Jay Powell's mentor was this guy right here. His name was Paul Volcker. And Paul Volcker is very well respected, and he's passed now, but Paul Volcker in the 70s and 80s, and I think everybody remembers this, he had a dual mandate because unemployment was rising, but because of the tariffs, because of the embargoes, some of you people remember the lines, Pia, the gas lines, remember that? So the bottom line is that we had a situation where he had a choice to make. Does he lower interest rates to drive lower unemployment, or does he raise interest rates to stop inflation? What he did was, Dick, you know what he did? He rose interest rates to 20%, and it essentially caused unemployment to go to 15%. But why did he do that? He did that because he had to protect the global currency. He had to, because the global currency is who buys our bonds. He says, I'll worry about unemployment later. So what is Powell going to do? What is Powell going to do? Right now, we are the best looking horse in the glue factory. But if we lose that reserve currency, look what happened in Germany after World War I, right? You lose your reserve. Nobody's going to buy your paper. If I go to Japan, if I go to Germany, if I go to the EU, and I say buy our paper, they're going, not unless you pay me more interest. Our interest rates go up, mortgages, loans. It's not good for any businesses. Okay. So this was an article in the Financial Times that basically said we really should look towards more like the 30s under Smoot-Hawley. Now, Smoot-Hawley, what they did was they caused a major tariff. They rose tariffs in the Great Depression. They're attributed to keeping the Depression for an extra 3 years. So they're saying that, here's what they're saying. They're saying that it's going to have an effect on equity market valuations. Now, think about what I just said about 22 times earnings. They're saying earnings are coming in, and that valuation starts to rise, and that's when you get that market coming in. So bottom line is, what is the Fed going to do? Here's my prediction. Inflation report comes out August 12th. That's the CPI. And September 11th. So they're going to report the numbers. So then Powell meets on September 17th. So Powell's going to he's going to be looking at, Patty's going to be looking at 2 inflation reports before he has to make a decision on interest rates. If any of these come in hot, how the heck is he going to lower rates? And if they do come in hot, how is he not raising rates? And Dick, if he raises rates, that big tech portfolio of yours. Okay, I don't want to be a naysayer, but I'm just trying to look at the facts. Retail investors, now this is the big cajon in the room. And we talked about this, and I know, Dick, you had asked me a question before the talk about buybacks, but here's why I think this market's trading at an all-time high, right here. And I was arguing with my ex-employees, we're friends, he moved to Texas, and the retail buyer is buying the dip. The retail buyer is buying the dip. He goes, the retail buyer doesn't affect the market. I said, Thomas, look at the leveraged ETFs. Look at the volume on leveraged ETFs, because institutions don't buy leveraged ETFs. It's exploded. These are day traders. These are not institutional buyers. So what we're getting is, think about this. Think about this for a second. Think about, and Dick, you appreciate this. Marlon, you appreciate this. Think about, since 2008, the Federal Reserve has always come in and supported the market since 2008. Now, that wasn't like that When I was on Wall Street, I remember 2000, the Fed didn't support the market. The market dropped for 3 years in a row, March of 2000 all the way to like almost 2000 for 3 years. So the point is, if the Fed's going to come in and save the day, then Lori, just buy the dip, buy the dip, buy the dip. And that's what's happened every time. Think about that. You buy the dip, market's down 22% as of April 8th. The market's now trading up 7% year to date. So those people that bought the dip made bank. The point I'm making is, think about this. 17 years ago was '08. That means that anybody that's 45 years or younger knows nothing else, Marlon. It's the herd mentality. It's the group think. Oh, it's always worked. It always will work, right? Because humans are a herd mentality species. So if we're going to buy the dip, my argument is Powell is not going to save the day if tariffs come in and he's got to raise rates. He's not going to lower rates to support the market. So this is why the market, and this is why you can't be in cash, Susan. You say, well, maybe we should just be in cash. No, because you're going to miss out on cash is not an investment strategy. But does this market scare me? It sure the heck does. Do I sleep at night? Very well, because of the way I manage your money. We'll get into that in a minute. So anyway, and then of course you got this nutbagger, right, who he says he's going to, Medvedev, whatever, the president that was before him, says we're going to nuke Ukraine. And of course, what does Trump do? Trump basically sends a bunch of nuclear subs around Russia. Oh, you want to see this market drop 20% just like that? Boom.